Hi, today we will learn about Islamic banking and conventional banking in Law 240. But first, let us introduce our team members. Firstly, Noor Anis Sofia. Second, One City Nemariam. Third, Demir Batrisir. Fourth, One Nerdemir Maisera. And lastly, Insira Najwal. In this video, you will learn three things. Which is differences in Islamic banks and conventional banks, how these principles reflect ethical and professional conduct in financial dealing, and last but not least the examples of banking practices demonstrating these differences in Malaysian context. Let's get started. For Malaysian system, Malaysia's one-of-a-kind financial system is called dual banking, where Islamic banking and conventional banking are running in the same economy. This is legally accepted in the Section 27 of the Central Bank of Malaysia Act 2009. In the beginning, it seems both systems are the same. They have saving accounts and provide finances and investment products. However, the principles guiding both of these systems are quite different, despite these systems looking and working the same. These systems are different in the way money is handled and in the way commerce transactions are done with ethics, equity, and professionalism. Next, we will see the differences in fundamental principles. First, legal definition for Islamic banks. It is based on Sharia law, which financial transactions must obey to Islamic teaching. Objectives and operation don't involve any elements that are prohibited by Islam, such as riba, interest, gharar, uncertainty, and maisir, gambling. While for conventional banks, it operates on secular, capitalistic principles that do not involve religious guidelines. Their primary aim is profit maximization for shareholders, accepting deposits from the public and providing loans or financing, typically based on interest. Second, for Islamic banks promotes risk sharing between provider and capital or investor and the user of funds, while conventional banks, investor is assured of a predetermined rate of interest. Third, for Islamic banks aims at maximizing profit but subject to Sharia restrictions, while conventional banks aims at maximizing profit without any restrictions. Fourth, for Islamic banks has become one of the service-oriented functions to be a zakat collection center and paying zakat, while conventional banks does not deal with zakat. Fifth, for Islamic banks, participation in partnership business is fundamental function, while conventional banks lending money and get it back with compounding interest. Sixth, for Islamic banks, no provision to charge any extra money from defaulters. Small amount compassion and proceed is given to charity. Rebates are given for early settlement at bank's discretion, while conventional banks can charge additional money, penalty and compounded interest. Seventh, for Islamic banks must be based on Sharia-approved underlying transaction, while conventional banks for interest-based commercial banks, borrowing from the money market is relatively easier. Eight, for Islamic banks, since it shares profit and loss, bank pays greater attention to developing project appraisal and evaluations. While conventional banks, since income from the advance is fixed, it gives a little importance to developing expertise in project appraisal and evaluations. 9. For Islamic banks give greater emphasis on the viability of the projects, while conventional banks give greater emphasis on creditworthiness of the client. 10. For Islamic banks can only guarantee deposits for deposit account, which is based on the principle of al-wadiyah, thus depositors are guaranteed repayment of their funds. However, if account is based on other concept or product, client have to share in loss and profit, while conventional banks has to guarantee all its deposit. Now, we already know the differences between Islamic banks and conventional banks. So, how these principles reflect ethical and professionalism in financial transaction. Number 1. Ethical foundation for Islamic banks. It is guided by Islamic ethics and more focus on fairness, justice, honesty and preventing exploitation, while conventional banks, ethics exist but business interest comes first. Number 2. Sharia governance for Islamic banks. Central Bank of Malaysia recognized Sharia Advisory Council, SAC gives rulings to ensure banking follow Islamic rules and decision binding to court and bank, while conventional banks no religious oversight and it only follows financial laws and regulations. Number 3. Decision making for Islamic banks. Every product must be checked by Sharia scholars as something legal but unethical, like exploitation, gambling not allowed, while conventional banks, as long as it is legal and profitable, it is usually acceptable. Number 4. Risk sharing for Islamic banks. Promotes fairness in contracts and risk and return should be shared. While conventional banks mostly transfer risk to customer like late fees, penalties, interest burden. Number 5. Social responsibility for Islamic banks. Protects community interest, avoids harm to society and also encourages social justice, while conventional banks CSR program exist, but they are not core objectives. Number 6. Transparency and trust for Islamic banks. Encourages full disclosure and builds public trust, while conventional banks transparency depends on company policy, not religion. And last but not least, overall goal for Islamic banks. Combine profit plus ethics plus social justice, while conventional banks focus primarily on profit and growth. Now, we already know how these principles reflect ethical and professional financial transactions. But, what is the example of banking practices these differences? First, deposit savings account. For Islamic banking, customer is seen as owner or partner, not lender. Money only used for Sharia-compliant activities and returns may come as a VAR or profit sharing, while conventional banking, customer is lending money to the bank and bank must pay interest. Second, returns on deposit. For Islamic banking, return are linked to real activities and it is not guaranteed, while conventional banking, fixed interest regardless of performance. Third, murabaha or financing. For Islamic banking, bank buys asset and sells to customer at cost plus profit. Price must be clearly stated up front and cannot be changed midway. While conventional banking, bank lends money and interest keeps adding until full repayment. Fourth, late and early payment. For Islamic banking, there is no reward for early payment and penalty cannot be excessive, only administrative cost, while conventional banking, penalties and interest charges are common. Fifth, customer defaults. For Islamic banking, bank may take back asset and only to cover actual outstanding amount, while conventional banking, asset may be taken and debt can still continue with added interest. And last but not least, home financing example. For Islamic banking, musharaka interest, or what we call shared ownership, means that customers slowly buy bank's share and shared responsibility, while conventional banking, mortgage or full burden on borrower and interest accumulates over time. So in conclusion, Islamic banking tries to ensure fairness, transparency, and shared responsibility, while for conventional banking, they focused more on lending, repayment, and also interest income. Thanks for watching. Bye.